Hello and welcome to Focus On. I'm Kenneth Igbomor, and today we'll be looking at discussions from the 2025 Africa Financial Summit from Casablanca in Morocco, where the summit brought together policymakers, bankers, and investors to rethink Africa's financial sovereignty. And one of the key debates here has centered on whether African governments can entrust their foreign exchange reserves to local banks, a move that could redefine financial independence on the continent, but also carries some potential risks. I sat down for an exclusive chat with Ini Ebong, the Deputy Managing Director of FirstBank of Nigeria, to unpack the discussions. We explored the broader theme of AFIS 2025 and the perspectives shared during the panel on trusting local banks with FX reserves, a move to boost sovereignty or a big risk. Take a look.
I'd love to hear your thoughts on how we should go about this as a continent.
Thank you, Ken. Thank you for having me. Well, I mean, it is clear to me that, you know, there's a well-oiled mantra about Africa must be developed by Africans. So clearly, one must unlock the pool of African savings that exists on the continent and make them available for African development. So the topic that's being pushed to this conference is really apt. How do we unlock Africa's national savings, right? Africa's pool of domestic savings, Africa's capital for African development.
Yeah, because at the end of the day, we're looking at pension funds, we're looking at sovereign wealth funds and other forms as well. But for you, in painting this picture about how we should go about it, what does that look like for you?
For me, it's really quite simple. I mean, the estimates are that there's 4 trillion worth of domestic savings in Africa, right? So if indeed that exists, then what needs to happen is to drive the allocation or some allocation of those resources into African domestic pools, right, for domestic investment. Now, what does that mean? What does that take? It means that perhaps regulators need to adjust regulation that govern things like asset allocation if it's in the pension fund industry. Regulators need to be more flexible, allowing investments domestically or through domestic financial institutions, right? And these are the things that will unlock some of that and will now be available for investments locally.
Yeah, because I'm not going to segue into your panel now. Quite an interesting panel talking about trusting local banks with FX reserves. And I'm trying to get your perspective on this and how, if it's workable or not for the continent.
I mean, it's certainly workable. And, when this topic comes up, by no means are we saying it should be carte blanche. No, we expect that the regulators establish some form of guardrails around it. But it really is quite simple. Today, when you look at central bank reserves, the estimates are that we hold, all central banks across Africa hold around $450 to $470 billion worth of reserves, right? If you exclude holdings of gold, which are about 40 or so odd billion, you're left with a net in terms of cash reserves with something like in excess of $400 billion. Now, where does that money sit? It sits largely in global correspondent banks, global central banks, the Bank for International Settlements, and blah, blah, blah. Now, imagine a world where 10%, 20% of that is allocated to regional financial institutions. And there are enough regional financial institutions or banks across Africa that arguably we should be able to place 10% of the continent's reserves. Now, what will that do? That will provide a pool of liquidity that could underpin, for example, domestic trade finance. Because the same way our central banks give these reserves to the global correspondent banks, we then, as commercial banks, turn around, go cap in hand to go get trade lines and other lines, of funding from these same institutions. Now, if we could go directly, or if some proportion of these reserves are held, they provide a stable pool of domestic of liquidity for the banks, and this can be used to underpin domestic trade, finance, domestic lending, and other things, and just adds to the pool of liquidity that's available for African development. So it is something that I would strongly wish and urge central bank and other regulators to look at.
Yeah, because there are still many hurdles to get this done. But when you weigh the pros and the cons, how does that balance out?
Do not forget, and I do not in any way down underplay what these represent. These represent a pool of domestic savings, right? They're a national resource, but they need to be used for national development purposes. So I would expect that the regulators define the guardrails. I would expect the regulators be very discerning around the choice of, I would argue, regional players across the continent that could be entrusted with this. And as our institutions scale, do more with these and there are examples all across Africa.
I like the point you just made now, talking about regional players, because you made a point in your panel talking about why we need to focus on regional blocks before we then get into Pan-African. Speak to that and give it some more context.
Okay, I mean, there's a utopian ideal around the African Economic Union and all of that, but that's going to be a long-term objective, and it will take time. Today, all across the continent, we have strong regional blocks that already exist. We have ECOWAS, we have SADC, and so on. And so, in my view, we're going to make what we have work and work more efficiently, especially from the perspective of growing stronger, larger financial markets with much better financial market architecture, products, and capacity. Because in many of our markets, we're small, they're subscale, so they cannot attract the right or attract the right amount of capital or investment flows that are needed for national development. So my view would be, if we deepen our regional cooperation, especially around building and scaling our financial markets, which means looking more towards creating regional capital markets, regional exchanges, right? So that when we look at them, they're much bigger. They provide much better liquidity that allows for better capital formulation, which can then underpin business development, national development, and so on. So I think regionalization is the first step, okay, right? Before we start talking about, the Pan-African ID.
From your panel, you said that the reality basically is that there's a fallacy that intra-Africa trade isn't working. Put that in context for us, because you said it's largely informal, what we're seeing play out as it's not captured through the formal channels.
Yeah, and that's largely on account. Well, I mean, it depends on the market. But if you look at West Africa, if you look at Nigeria in particular, there's a huge amount of cross-border trade that happens between Nigeria and the surrounding countries. Nigerian manufactured goods, we find them being sold and traded as far away as in Senegal, in Sudan, and all. Now, the reality is it happens. Go to any Nigerian border city, right, and look at the amount of trucks that are leaving Nigeria with goods every day. So the trade does happen. The challenge is the trade doesn't happen through formal channels. And that's what we really need to look at and ask, why? Arguably, a big component of all of that are existing trade regulations, exchange controls, and so on. And I think a lot more time needs to be spent by the regulators on both sides of the border to step back and have a look, see what is impeding this. Why is there the preference for people to use informal channels rather than formal channels? PAPS is a great idea, right? But PAPS deals with one part of the problem, which is creating a platform for intra-Africa currency exchange, right? The other part is dealing with the intra-Africa or regional trade and currency control regulations. And we really need to dig deeper to see what can we do to simplify some of these regulations such that these activities can come through formal channels that will make things, that will really drive us. And that to me is where we should spend some more time to try and streamline those processes.
Yeah, because at the end of the day, what we're trying to achieve here is a financial ecosystem that works for Africa. And I'd like to then segue into the area of the capital market, because you made quite an interesting point there. You talked about the fact that, which is a reality, the fact that capital markets are still quite too small. to get the kind of skill that we need. You made a point that we should try to see how to link them, and then the regulators should also play a role in that support as well. Let's speak to that and how we can deepen the capital markets.
We need bigger capital markets. We can't keep having so many fragmented exchanges all over the place, right? So my view is there must be closer linkages. And the first step, regional markets. Yeah, they could have branches in different places, as the case may be. But until we have markets of scale, how do we raise the capital that's needed to build the next refinery or the next dam, or to encourage people to raise capital in the scale that is required for the developmental needs? Now, some of that will require regulatory change. Some of that will require perhaps a rethink of our financial market sovereignty, right? But ultimately, what is the objective? Integration of financial markets sub-regionally, eventually and on a Pan-Africa-wide basis, to give us the scale that can attract capital.
Quite a lot you said there, because when we look at what's happening there, we're looking at a continent that needs to industrialize at a large scale. We need the financial muscle to drive that industrialization to achieve the growth that we need for our industries to help with jobs. So it's a lot more or less like a chicken and egg situation. So, but then at the heart of all of this is the role of the financial sector. On what they're going to be doing in there. But then I was speaking to an aviation regulator, an aviation player, sorry, who spoke about the fact that banks don't seem to understand the nuances of their own markets, because sometimes the banks are not patient enough to lend to them in the time frame that they feel will work for them. So let's speak to that as well, and what banks they need to do looking internally. Like Ike said yesterday, with the plumbers, we also need to look at ourselves to see, how then we can make this work quicker.
The business of banking is fundamentally financial intermediation, right? We take and raise deposits and we deploy those through lending. We create and raise capital and we deploy it to people who need capital to us. And it operates at various levels and all. The bane of many sectors across the markets we operate in is always that banks don't want to lend, and I think again that is wrong. Banks have done a pretty good job at supporting growth across Africa, whether it be at the SME level, to the mid-cap level, to the large corporate level, right? And we look at all sectors that we can lend into.
And that was Ini Ebong, the Deputy Managing Director of FirstBank of Nigeria, sharing insights on how Africa can balance financial sovereignty with prudent reserve management and more. As Africa looks to deepen its financial systems, the question goes beyond whether to localize FX reserves, but how to build the trust, the frameworks, and the governance standards that make it sustainable. I'm Kenneth Igbomor. Thank you so much for watching.